Hi there. Good morning. My name is Victor Louis, and I'm the head of investment advisory at Sankore Global Investments. This is your weekly financial market updates. Start off in the US market as usual, where stocks closed high on Friday after a better than expected jobs report, essentially assuaged concerns around the health of the US economy. The S&P was up 0.9%, the Nasdaq added 1.22%, while the Dow gained 0.81% on Friday. We saw that rally obviously on the back of the fact that the job number that we got was significantly better than what the market had expected. The US economy added 254,000 jobs against an expectation of 150K. Also, unemployment ticked lower to 4.1% from 4.2%. So clearly, the bounce that we saw on Friday essentially erased the recent losses that we had seen, particularly all of last week, really leading up to Friday, essentially on the back of all of the geopolitical tensions in the Middle East and all of that situation there. So the week turned out a positive one after all. The S&P was up 0.22% for the week. The Nasdaq added, 0.1%, while the Dow just inched higher by about 9 basis points. Also, in a sign or reflective of the fact that this rally or recovery that we saw on Friday was really broad-based, the Russell 2000 added 1.5%, on Friday. So again, this job number was really, really cheery because if you look at what we've seen over the summer, the labor data came out, somewhat weaker than expected, particularly on the heels of the revision of almost 1 million jobs over the last 1 year that was done. So clearly this move or this recent data that we saw, was quite strong. And basically gave reassurances that the U.S. economy remained quite resilient. Also, last week, Fed Chairman Jerome Powell was speaking and essentially alluded to the fact that we are likely to see, more rate cuts, which would probably be smaller than, the initial one that we had seen. But also highlighted the fact that, the Fed is really not on a preset path or a preset course, and that, as the data come out, that would essentially, determine, the Fed's position, going forward. For this week, really, we're expecting CPI data and also the minutes of the last Fed meeting. Obviously, that CPI data will certainly be really crucial in, creating the impression of what's really going on with the price situation or with inflation. Are we going to see a situation where that data shows us that, inflation really has been subdued and continues to, go down? Or are we going to see some kind of, stagnancy or resurgence? That kind of data would really, really be crucial in determining what happens to the market, at least in the near term. Over in the Middle East, that was a major event last week as the situation essentially escalated with Iran firing a barrage of missiles at Israel essentially in retaliation for the killing of the Hezbollah leader. On the back of that, really, we saw crude oil prices rise last week by about 9%. Before that, we had seen crude oil prices actually dropping. So that situation last week saw crude oil prices rise about 9%. The situation is still very, very fluid. Israel has vowed to respond at a time, place, and method of its choosing. It's also reopened the offensive in Gaza, where it's basically saying that it's trying to ensure that, the decimation of Hamas stays the way it is and that there isn't any resurgence there. So another front has essentially opened up in Gaza while it continues its offensive into Lebanon. So this is a very, very fluid situation and really has potentials to, upend a lot of things within the financial market and also the commodities market. So certainly we will continue to keep a really, really close eye on situations there as they develop. Over in Europe, Eurozone inflation fell to about 1.8% in September, below the ECB's 2% target. This was in line with expectation. Also, we saw core inflation coming lower than expectations. It came in at 2.7%. Service inflation eased to 4% from 4.1% in August. In spite of all of these sort of progress on the inflation front, there is still the possibility that we could see a mild price resurgence in the last quarter of the year. However, with the recent really drop that we had seen in crude prices over the last couple of weeks, that has kind of taken the pressure off of that energy inflation component. So again, this inflation number would clearly be very instrumental in determining what the ECB, does for the remainder of the year. Really, the expectation was that at the next meeting, which is happening on the 17th of October, the ECB was likely going to hold off and then carry out further cuts for the remainder of the meetings that it has this year. So we'll basically continue to keep an eye on that development. And over here in Nigeria, the liquidity situation in the fixed income market was still largely front and center. The T-bills market was, bearish, as participants, basically tried to, sell bills to create liquidity, because there was an home auction last week that essentially sought to mop out, the liquidity that basically been sitting in the system for a bit. The CBN essentially continuing its tightening stance. The bond market was also quiet. The sentiment was pretty much largely the same thing with what we saw in the fixed income market. Bid offer spreads were really, really wide. As a bit of uncertainty sort of crept into the market. In all, bond yields rose about 13%, week on week. So for this week, I think the critical thing from a global market standpoint would be that CPI number from the US. Also, very, very critically, how things unfold in the Middle East will prove very, very crucial in determining what happens in the near term, to global markets. So that's pretty much it in terms of our updates. We hope that you have a very, very productive week. Thank you very much.